All right, guys, time for a little bit of recap. It is Tuesday. Let's talk about the market. So coming into this week, we had a pretty substantial tag of some serious support and resistance. So this hard dashed yellow line you see up here, this is a standard deviation 1 year, 1 week scale. We have that coded down into our intraday chart so we can see where that is on the 5 minute, right? Or 1 minute or whatever intraday chart I'm on. But this is a representation of the 1 year, 1 week. Okay. And the other one is the 1 year, 1 day. You see in the smaller dash line, not quite as long. So you can decipher between weekly and daily. Last trade day here, Monday, this was a very heavy resistance point, and we haven't been up here except for our force up Friday in quite some time, so we had a little bit of a relax, right? So I was leaned short off of major resistance from yesterday to backtrace our Fibonacci results. So what we like to see, and we'll go to Friday's force up data. This is our jobs data here. We had a pretty abrupt candle. This is on the 5 minutes, so I took the high-low of that candle, and I like to pick tops with our Fibonacci. So 2618 is the extension of pretty much overbought, and that's where it hit Friday. We actually found a little support there, banged its head on that weekly deviation, came back down, and ended up losing that 2618. So historically, what they like to do is they like to retrace to the next level. So if you were to lose the 2618, we would come back down to the 1618 in sequence, right? So we started today and I leaned short for a back test into the next trade value. We had a couple different levels to watch here today, some pretty massive ones. And of course, I was looking for the back test of the 1618. Well, there it is right at open there. We didn't quite get it perfectly though, right? So we didn't get a tag. And that's something you're going to see a lot of the time when something is being forced up in FOMO or forced up in the insane metric of melt up, where levels don't always get perfect tags like regular trading sessions. They'll shy away from stuff, right? And they won't give you good entries and exits. So what I mean by that too is we can see on the moving average system here, let's swap to the 30-30, put it on a cleaner chart just for now so we don't have to see anything else there. But so the moving averages, we can tell by that as well. So once we lost, again, the dashed 50 right here, this is a 50 SMA in the red. Once we lost that, right, broke it down, we usually look for a back test of it, right? And that usually comes after a tag of the 100 EMA, which is the green right here. So after a 50 break will happen, well, we'll magnet to a 100 EMA. That 100 EMA will force back up to the 50, and that third positional move will be directional. So that third tag, so let's go over it one more time. The third tag, the moving averages. So break 1, support hit 2, back test 3. That is the decision maker, right? So in the moving average system that I created in the Elites trading system, our moving averages will have a test and then confirmation. This dang little thing won't keep highlighted on my pointer. So to get to the point here, the shying away at highs, you see right here happened a lot. So that 50 SMA was shied, 100 EMA was shied. So as we were waiting for a distinct hit on price action to moving average on the 30-30 this morning, so we couldn't really trade until we seen a direct hit, we were waiting for the 100 EMA because there was a break back here on the 50, which will magnet to the 100 EMA, which will pop to the 50, then cause a directional pick. Now, it was a very choppy, poppy day, but most hit, right? So the FOMO melt up is still in continuation. If you look at the daily chart, we have the gap up, right? We're into weekly resistance. Now, what happens now? Well, my small prediction and just recap for the day, we'll go over a couple of little things here. Where's my 1 year, 1 day? Did I lose it? I'm on the 1 year, 1 day. That's why I can't find it. It's silly. Okay, so 1 year, 1 day deviations, right? So the price action is a little messy because you can see the weeklies overlap because it codes anything into the underside of the lower time frame scale. So these deviations that are hard straight lines right here are daily representations. The big dash lines are the weekly representations. And you can see how the price action moves outside of the range of the daily. So 1 year time is what I like to stay on for the deviations. And you notice up here at the high of the last 1 year, 365 days, was 431.73. You notice that the deviation it hit up here for that rollover is +1. And then our sink and low, which is our big dip buy area here, was actually almost, it shied away a -3, which is this blue level right here. This green is the -2. Of course, yellows are -1. Regression is 0 on the center. So you see those lines right there kind of come in, and maybe I'll rescale this video if it's too hard to see, but for that representation. Now, the likelihood that the deviations allow the price action to stay above those markers unless under extreme news, fear, hyper, greed, catalyst, it just doesn't usually pertain. So when you see here the daily +1, right, has been hit, -1 daily, -1 daily. You see the pattern going on here, shied away right here twice on the +1, back down here, -1. So the likelihood in which they FOMO out and go crazy above the deviations, because this one's way up in +2 green, almost 3, is very rare. So when you start to see the market move outside of a +2 range, almost 3, you need to start looking at the absolute opposite of that. So what we're going to get into right here, I don't have this one on my list. We're going to go to the weekly time frame. So I'm just going to do a weekly 1 year, same exact thing, except we're going to go down to the chart of the weekly. So this is going to be the only deviation present on the weekly. Okay. So in the last 1 year, we have the same things. I just wanted to see the dailies first because the dailies are obviously going to be a little bit wider. The weekly here, you can see again, pretty close. We went +2 green here, almost to 3, and -2, almost to 3. Both are extremes, and obviously both in the last year are at our extreme highs. And those were extreme CPI and crash catalysts, so on and so forth. Why we thought the melt up was going to continue here is why our favorite indicators on the bottom are doing here. We have perfect oscillation on the MAC, still separating good lines. We have a good TTM wave, and we have RSI just straight up, right? And we have a little bit of room till it gets over hot. So the melt up can still continue. So we weren't looking for anything but continued melt up, just a short in the morning to get more long. Now, when we shrink this back down, and we notice that in the terms of travel outside of the deviation line on the 1 year weekly, it just doesn't happen very often, right? So we have this +1 hit, -1, -1, -1. So you notice right here, these are the minuses because they're below the regression. These are the plus, obviously resistance because it's above the price action. This is below the price action, it's support. We are into now that weekly deviation. So are we going to get a rare occurrence like we did at the high of the last 365 days where the weekly chart has pushed into almost the +3? So it stopped in between. And lo and behold, it's about 50% in between because you look at that little white dash line in right here because I look at everything as 50% in the market. You notice our MAC, our RSI, our TTM, half candle retraces, everything is in 50% for me. So these half deviations right here, it made it in between 50%, right? In between the +2 and the +3, and then it gave up right there at half deviation, right? So when the melt up has a chance to continue, right now, which it does, because all indicators are showing not only are we leading in volume, we are leading in all upside indicators, so we aren't looking for anything besides further melt up. It's saying the weekly can come back and test yearly highs, the last 365 consecutive highs, and most likely push past that. So my target is 430. That's the nearest target right now. So we're going to go to our super messy, super fun Fibonacci chart, go back into the intraday. So now you know the explanation on those deviations a little bit and how they cause big resistance points like so, big double top resistance. It needed to come back down, consolidate, and find some fancy support. I was hoping for the 1618. Again, I would have bought there and rode that up, but it consolidated and held the line. Now, there's two very specific Fibonacci retracements that I can't really show you outside of my group of where we got these specific lines. Line for me was 426.20, 426.62. This is the golden channel, right? We talked about that a lot on how to use the Fibonacci systems. So that golden channel is support. You see it dumped into the golden channel, hit exactly the bottom, rocketed straight up into right here. This is an intraday algo, something you guys got to pay a lot of attention to right now. It's an exhaustion algo. I'll explain that in further videos. But anything above this huge over under and the 38.20 50 pocket, which is down here, this is the pocket between the 50 and 38.20. It's right here. So that golden pocket, along with the top and bottom, it becomes a golden pocket. Either side of the 50 is the pocket, whatever the price action side is. So if we're on the top side, this is the golden pocket. So if you reverse this fib, this would be 38.20. It's the same exact thing. Just use it as a pocket. But as this went up, and squeeze back up. And people ask me, should I buy up here? Should I buy up here? No, it's kind of lame. Don't buy up there. Wait for the big pullback. Well, throughout the day, we got our algorithm hit here, pulled back, came to a back test of big confirmation and higher low in the day. We had the 50 support hit, came back down to the 61.8, and then plowed straight up. And this gold level right here is one of the biggest watches at 426.84 for me as well for over under. So you've seen it lose it today, had an abrupt reaction down and squeezed it. We called this squeeze play right here with that gold level this morning. For a nice pop up, you see the algos drown this thing. Where did it stop? Exactly at the gold level. Push back up, drowned it again. Where did it stop? Gold level, gold level. And then they did you a little bit of a trick consolidation right here to trap those shorts again, throw that fishing line out, get the worm out there, and then poof, rip the rug out from those shorts. And that's what the market loves to do, especially at these highs. There's lots of shorts for whatever reason, just thinking just because it's up has to go down. Obviously not the truth. The market will always stay higher, longer than it is short. That's because the FOMO, MOMO buyers are a whole different breed. So when we get on to what the further prediction is here, 38.20 and 430, probably go to the intraday chart for that, are my two targets. Now, as long as we are now maintaining above the 100% fib of the magic here, so right here, as long as we're pertaining to anything above 428, this is the call, we will push 430. Oh my God, big call. Oh my God, it's only 2 points. No shit. Yes, I understand that's a very tight notation for how high we're going to go, right? But we're going to hold the 428. We're going to push this and hopefully peak that 30. We're going to find ourselves in between these key levels, 38.20 being one of the biggest ones and the 1618. So this pocket right here is going to be your target if we stay over 428. So any 428 support you find, and it could dip a little bit more tomorrow and go in for another consolidation, because if this is the base and then it does this overnight, dips again, finds itself here at the 100 fib and then rolls back up, that's 428. So that's fine. If it rolls back up, dips, hits the 428, 430, absolute extensions are up there at the 431 plus. That is a bonus round. That is very, very, very few and far between. We'll get up there sooner. It can happen obviously later, just not this quick. But right now, further prediction is above 428 right here, 100 Fibonacci, essentially yesterday's close. You can watch that right here. So anything above that, we're going to get hit into the weekly, hopefully peak over that and get to our 430 target. Then I don't know what's going to happen. We have to look for direction at that. That is a very massive level. We could simply squeeze through that and start the further parabolic move of blowing the top off of this 431.73 and move higher. Now, that's completely possible because the deviation center right here on the 3-year, we don't use this too much, but is the only resistance right here. And then that next leg up right here, it's going to start shooting us to the top channels of our high-low Fibonacci. Now, if we get over the 38.20, obviously, the next set is 2360. So you're going to see that right here all the way up towards 450. And that would be that next FOMO rally up, maybe into Powell next week. That's a lot to ask for. I think in the markets, we're going to take it slow and target by target and keep nailing these 10, 15, 40, and 50 pointers throughout the days. I'm not going to stretch that far, but I have a pretty good feeling that if we do hold these Fibonacci levels and make it back up, we did shy that 38.20. We deserve a tag at that 38.20. That 38.20 is 429.86. Look for that long into the end of this week. Even if it dwindles down a little bit here and messes around, that next breakout level above 428 and hold of support, we will make that happen. And that's 20-some points in the futures. Still lots of good action there. So that is prediction for today. Those were the levels that we had watched. And now for the for tomorrow, rather, I guess the prediction is. Now for tomorrow, moving into that 428, I want to go to the ES that I have. This one's going to be a little hard to read, but as we open up here, this next dip, we're going to go to the 30-30 onto the ES. I want you guys to look for this through the night, because ES obviously trades through the night and then abruptly reflects SPY. So 10 points here on the ES equals 1 point on the S&P 500. Now, for this to move back higher here, you notice the moving averages are back to crossed over, which means the 10 is back through the 50. So what you want to see at open here, the 30-minute candle is here. It leads down. It finds the 10 SMA and or 50. The 50 stays above along with price action, the 100. So this 100 needs to be lower than this 50, needs to be above trending. And then the 10 needs to catch back up and continue its roll, and that will get us to that breakout point. The largest target I had, an ending of the target of yesterday, was right here at the 61.8 fib. You notice that abrupt reaction, and yesterday's highs right at our 61.8 fib, as these Fibonaccis that we pick are very specifically coded and very specifically picked with the algorithms. So you see, I call this the half, but between these two, as long as it held the 50 retrace, because I'm all about 50s, it was going to go long. And you notice our best friend right there, that dip into the 50 on the 30-30 chart came in. He was very nice to give us that support tag, or very close to. Very hard to see, I think, on that recording, but right here, we missed it by a couple of points. But lo and behold, it's still there. Now, two things are going to happen here. In the 30-30, we have now went sideways for multiple days, which means the standard deviation 2 being overbought is now stressing and pushing itself farther away from the price action, allowing more consolidation and more attempted move back up into the end of the week. So as long as we stay above 10 SMA is trending above 50, we are above 428 on SPY, we will progressively push into the ES's weekly here, right? This is the +1 weekly deviation on ES. We're going to see that push into that, into those levels in 43.30s to 43.40s, even to the 50s are what I have. So I think we could go as high as still 43.50 for my targets on ES. Just need a little bit of a dip, hold these moving averages, watch the separation, maybe get one more chop day into the end of the week, and progressively we continue the melt up. If it breaks back down under that 428, we start losing that really big gold level on SPY. We will swap that bias, because anything under that gold level that I have right here is sweet death at 426.84. Now, either way it could happen, but we were tentatively holding a very interesting level all throughout the morning there, and that did focus push. So best case scenario for us, it opens up, we wipe out, comes back down, sets up for another low flying support hit. The 10 SMA is over the 50 comes back around, finds support on the 50 SMA. Those moving averages start to separate on the 30-30, continues trend on the melt up. And if it wants to, again, deck back down under 428, under 426.84, those two levels are going to be your confirmation of weakness, and we'll continue that. So we're going to see how this plays out into the rest of this week, and hopefully we're going to get a better trade scenario week coming into Powell. So we'll catch you on the next.